How does Warren Buffett, one of the richest and most respected investors in the world, consistently beat the market and build massive wealth? Is it luck, genius, or simply discipline? In this video, we'll uncover everything you need to know about how Warren Buffett invests. From his mindset to his strategies, from his best investments to what you can learn from him, we'll dive deep into the mind of the Oracle of Omaha. By the end, you'll have actionable insights to apply to your own portfolio. Warren Buffett's early life and influence. Let's start with some background. Warren Buffett was born in Omaha, Nebraska in 1930. From a young age, he was fascinated by money and investing. He bought his first stock at just 11 years old and filed his first tax return at 14. Benjamin Graham, known as the father of value investing, Graham taught Buffett at Columbia Business School. His book, The Intelligent Investor, laid the foundation for Buffett's investment philosophy, focusing on undervalued companies with a margin of safety. Charlie Munger, Buffett's lifelong business partner, Charlie Munger, encouraged him to move beyond just numbers and look for high-quality companies with durable competitive advantages. Core principles of Buffett's investment strategy. Buffett's investing strategy revolves around a few timeless principles. Let's break them down. 1. Value investing. At its core, Buffett's philosophy is to buy stocks that are trading below their intrinsic value. This means finding companies whose market price doesn't reflect their true worth. Example, Buffett's famous investment in American Express in the 1960s. When the company was undervalued due to a scandal, Buffett saw its intrinsic value and bought shares, leading to massive returns. 2. Circle of competence. Buffett believes you should only invest in what you understand. If a business is outside your expertise, it's better to avoid it. Quote, "The important thing is to know what you know and know what you don't know." 3. Economic moats. Buffett looks for companies with strong competitive advantages or moats like brand loyalty, patents, or cost efficiency that protect them from competitors. Example, Coca-Cola is one of Buffett's longest-held investments because of its brand strength and global reach. 4. Long-term focus. Buffett famously said, "Our favorite holding period is forever." He buys businesses with the intention of holding them for decades, not months. 5. Management quality. Buffett evaluates the people running a company. He looks for honesty, capability, and a shareholder-first mentality. 6. Avoiding debt. Buffett avoids companies with high debt levels. He prefers firms that generate consistent cash flow and don't rely heavily on borrowing. How Warren Buffett analyzes a stock. Here's how Buffett analyzes stocks before investing. 1. Understand the business. Buffett starts by studying what the company does, its products or services, and its industry. Example, Buffett avoided tech stocks for years because he didn't fully understand them. He stuck to industries like consumer goods and insurance, where he had deep knowledge. 2. Assess financial health. Key metrics Buffett uses: revenue and earnings growth. Return on equity (ROE), a measure of how efficiently a company uses shareholders' equity. Debt levels. Low debt-to-equity ratios are preferred. 3. Determine intrinsic value. Buffett estimates the intrinsic value of a company by projecting future cash flows and discounting them to the present value. 4. Margin of safety. He only buys when the stock is significantly undervalued, leaving room for error. Key investments that shaped Buffett's career. Buffett's portfolio includes some of the most iconic investments in history. Let's look at a few highlights. 1. Coca-Cola. In 1988, Buffett began buying Coca-Cola stock. He appreciated its global brand, strong cash flow, and pricing power. Today, Berkshire owns a significant stake, worth billions. 2. Apple. Although Buffett was once skeptical of tech, he started buying Apple shares in 2016. Now, it's Berkshire's largest holding, worth over $100 billion. 3. Geico. One of Buffett's best investments was buying Geico, an insurance company. The steady cash flow from insurance premiums helped fund other investments. The mindset behind Buffett's success. Now let's explore what makes Buffett's mindset so unique. 1. Patience and discipline. Buffett is known for his long-term view. He doesn't panic during market downturns and avoids chasing trends. Example, during the 2008 financial crisis, Buffett didn't sell his holdings. Instead, he bought more of companies he trusted. 2. Focus on simplicity. Buffett keeps his strategy simple. He avoids complicated financial instruments and sticks to businesses he understands. 3. Emotional control. Buffett avoids emotional investing. He sticks to facts, data, and logic. 4. Frugality. Despite being a billionaire, Buffett lives modestly. He drives the same car for years and lives in the same house he bought in 1958. 5. Continuous learning. Buffett spends 80% of his day reading and encourages others to develop the same habit. Lessons for viewers. So, what can we learn from Buffett's success? Here are some actionable tips for your own investing journey. Invest in index funds. Buffett recommends index funds for most investors. They offer broad market exposure with low fees. Don't time the market. Buffett doesn't believe in timing the market. He focuses on time in the market instead. Stay consistent. Invest regularly, no matter what the market is doing. Dollar cost averaging is a powerful tool. Focus on the long term. Don't chase short-term gains. Think about where your portfolio will be 10, 20, or 30 years from now. Educate yourself, read books, study companies, and continuously improve your financial knowledge. There you have it, the secrets to Warren Buffett's incredible success. It's not about being a genius, it's about following timeless principles, staying disciplined, and thinking long-term. Remember, you don't need to be the next Warren Buffett to succeed. By applying just a few of these lessons, you can improve your own investing game. Thanks for watching. If you enjoyed this deep dive, don't forget to like, subscribe, and share your favorite Buffett quote in the comments. And as always, happy investing!